This is the ABQ Business Podcast with your host, Jason Rigby. Each week we'll interview visionary business leaders to inspire the creative power and spirit that's in every entrepreneur. Discussing strengths, weaknesses, strategies, systems, and the problems we can all solve together for a new future for local small business.
Hey guys, Jason Rigby here. Really excited. I got another tax planning. And before, remember, I told you, and some of you guys had DM'd me and said that it was really interesting and you were about ready to tune us out. So this is going to be another one. We do have Sandhya. She's here again. Hello, Sandhya. How are you doing?
Hi, Jason. How are you?
Good, doing real good. So yeah, it was funny when I had talked to some business owners had DM'd me on Instagram, and they had told me, they're like, "Oh, when we heard about taxes and PPP and all that stuff, we were already stressed out from it, so we didn't even want to listen to it again." But then they listened to it and they said they got some help out of it. So excited about that. But today we're going to get into tax planning. We'll get into a little bit of asset protection. And so I think one of the things that people need to understand more than anything is, one, I want to make sure that people know how to get a hold of you because you're the expert in this. So if you could kind of share your website, a little bit about you, and then what is tax planning?
Yeah, that's awesome. I think it's fair to talk about myself and my skills first, and I'll be happy to share my contact information. And then we'll delve right into what tax planning is and why do we need asset protection, or why are we talking about asset protection along with tax planning? How does that sound?
Yeah, that's perfect.
Okay, all right. So for those of you who know me, great. If some of you don't know me, my name is Sandhya Jindal, and I am the owner and CEO of Jindal CPA firm. My team and I, we specialize in doing tax planning and fractional CFO services for small business owners. Most of our clients come to us through tax planning because we can add value to their business right away. Unfortunately, a lot of business owners do not know what tax planning is, and that's probably what my biggest passion is to educate the small business owners that they have an opportunity to save anywhere from $8,000 to $80,000 in taxes, depending on their revenue in the business. The best way to contact me is if you could go to my website, www.jindalcpa.com. Jindal is my last name, JINDAL. CPA.com, and there should be a link to schedule an appointment with me. So the first 45-minute consultation is completely free, and I would encourage every person who wants to make an appointment do that, because we go much deeper into understanding the needs of your business in those 45 minutes, and they're completely free. So the most value added at that time is identifying what the needs are. A lot of business owners don't even know what they're suffering, what their needs are at this time, and they're just confused, and they're good at what they do, but they need help in certain areas. So that's where we come in and we identify what do they need help with. So my number here is 505-552-2470. Somebody in the team would answer it, and if nobody answers, just leave a message and we'll make sure we'll get to you within 24 hours.
So when somebody's looking at, tax planning, we, a lot of us as business owners, entrepreneurs, we're always on the go. We're always wanting to do, move forward, let's go. And to sit down as an entrepreneur and think about planning, for my business, that's one thing. But then tax planning, what is tax planning, and how does your firm make it simple for them?
Oh, that's an awesome question. And I think that's where most of the problems come in, when people or business owners do not know what tax planning is, because it's a very scary term. And most of the people, the moment they hear it, they think I'm going to shut down because it's something to do with taxes, right? So
Right.
I will do my best to explain it in the most simple language I can, so that everybody understands what tax planning is. Tax planning, think of it this way: it's the legal, moral, ethical way of saving you as a business owner anywhere from $8,000 to unlimited $150,000 in taxes. So most of the small business owners that are in business, they think that they are taking deductions, which means they are running their expenses through their business and they don't need tax planning. That is absolutely not true. Tax planning is where an expert can come in and make every single deduction run through your business when originally you can't really do that. So I'll give you an example. If you have a health expense and you are a sole proprietor, there are certain expenses that you cannot run through your business. You have to pay something out of your pocket because your deductions are limited on your tax return, the way you file your tax return. However, with effective tax planning, you can run unlimited amount of deduction through the business and even take your business into a loss and take that loss against any of the other W-2 income that your spouse may have. Does that make sense?
Yeah, no, that makes sense. Yeah. So if you could get into that, like, I don't want to get into like too much detail with that, but
Sure.
like whenever I'm looking at, because I know a lot of people have their children involved and stuff like that.
Yeah. Yeah. So tax planning is, again, looking into your personal and your business situation and understanding what we can do to bring you the maximum deductions, right? So some of the business owners that are already taking some generic expenses, that's fine. However, you may still end up owing $10,000-$20,000 at the end of the year, or in total. So people who have children, one of the strategies we can do is we can legitimately and legally hire your children in your business. And once we hire your children in the business, depending on the entity structure that your business has, maybe whether it's an LLC or an S corporation or any other form of entity structure, we will identify which would make sense to bring you the maximum benefit of hiring your children. So think about it. If you are spending $10,000 on your child, for buying food for them, for purchasing clothing, for sending them to private school, those kind of things are not deductible through your tax return, right? However, when you hire your children legally in your business, all of those expenses all of a sudden become deductible. There's a very set way of deducting those expenses. Of course, there are some strategies that everybody knows about. For example, taking a home office deduction. But the biggest thing is, if you're not taking the help of an expert, how are you implementing that strategy is
Right.
what brings you the deduction or does not do anything for you.
Yeah, and then like as business owners, entrepreneurs, what are other ways that they can pay less in taxes?
So some of the other ways that they can pay less in taxes are, identifying. Obviously, there are something called workhorse strategies. Workhorse strategies are the strategies that will nearly apply to every single business owner. And then once they come to us, we will also look into the trade and profession that they're in. So industry specific deductions are also a key to bring them the results. So for example, we will identify if you have any real estate. So whether you are a real estate agent or a broker or doing rental property business on the side, there are many deductions that we can apply towards your real estate situation. So those are called very niche or industry specific deductions. Now, somebody would say, well, I don't have any real estate, so I may not qualify. That is not true. This was just an example how a specific industry has very specific deductions that we can apply to them. So same thing with the workhorse strategies that I talked about. Hiring your children may be one of them. Having a home office deduction may be one of them. However, we just have to understand that all of these strategies are very well known to all of the business owners, but it is still complicated to implement them. So most of the tax planners that I have met in my life, they would talk about the strategies, but they wouldn't put emphasis on how these need to be implemented in a business owner's life. How would it run through their books? How would it run through their payroll? If we are specifically talking about any of the health insurance policies that we have available for our business owners. So these are the things that you can actually accomplish by working with somebody who is more inept in putting the documentation behind that tax planning that they will do.
No, that makes sense. Now, when you talk about year tax planning, and we get into this, some people may be thinking, well, I already do this with my accountant, I've already done that. What if they already do end of the year tax planning?
So that's a great question, Jason, because there is no such thing as end of year tax planning. And here's the reason why. Tax planning works proactively. So if somebody comes to me today and I would promise them that they will be able to save $12,000 in 2020's taxes, and they decide that they're going to wait because of their own personal situations, and they come back to me again in October and they tell me, now we are ready, what do you think? Can I save them those $12,000, or would that number go up or down? Of course it's going to go down, because proactive means every single day, if you're not doing a tax planning, you're losing money. So anytime you move forward, you have lost all those opportunities of taking those legal, moral, ethical deductions that IRS and the tax code has in place for the lucky business owners. There aren't very many strategies that can be applied to W2 employees, because the tax code is designed specifically for business owners only. Warren Buffett, for example, his income was $39 million in 2010, and he only paid 17% in taxes. When was the last time we were in the 17% tax bracket? I mean,
Right.
Yeah. So that's the magic of tax planning. But if somebody says that I already am working with my CPA and we're doing year-end tax planning, that there's no such thing as year-end tax planning. You have to be proactively working with your CPA or your tax planner throughout the year for you to get those benefits.
Yeah, and a lot of people don't realize that by doing this, it's worth their time, because there's, like you said, they could be tens of thousands of dollars they're saving.
That's right. Yeah. And a lot of times people confuse tax preparation with tax planning. And a lot of clients that come to me frustrated from their prior CPAs or accountants, they would say that, well, my CPA does not spend any time with me, and whatever information I give them, they'll put that in the tax return and file it to the IRS. That's called tax preparation. And that is a different business model that is only designed to keep you in compliance. Because if you are not in compliance of filing your taxes, you're going to be in trouble. Now, there's no value add there, right? So nobody can say that I'm working with a CPA and they're doing their due diligence and saving you money on taxes. So if you haven't been meeting your CPA, and they're not talking about any of these tax strategies ahead of time during the year, then you're not doing tax planning.
That makes sense. Now, what is the difference between the way that your team approaches it compared to what maybe like a traditional CPA would?
Oh, that's awesome. Yes. So what we do, I would like to talk a little bit about the tax and accounting team and different personality types. I believe we just started talking about it in terms of who's preparing your taxes versus who is doing the tax planning. So in a tax and accounting team, if we envision we have a bookkeeper or an accountant or a CPA and a EA or a tax preparer. These may be the people on your team that may be providing you value in terms of complying and compiling all the information relevant to what has actually happened in the past. So once things happen in the past, they will bring together the information. They will prepare your books so that you can file your taxes on time. So all of these people, bookkeepers, accountants, CPAs, most of the CPAs, tax preparers, they are being reactive to the last year's information, and all they're doing is making sure that you're in compliance filing for your taxes. Now, there's no benefit whatsoever. It's just a cost to the person who is filing their taxes because they see their fee that they're paying to their accountant or a bookkeeper or a CPA as a cost. Now, if you look into another aspect of tax and accounting team, there comes controller, tax resolutionist, and a tax planner, a CFO, and a tax attorney. So all these people that I just talked about, they're the ones who are more future facing. They are more proactive. They are the ones that are looking into tax reduction strategies, how to save you from the IRS, where the tax resolution strategies come in case you ever get in trouble with the IRS. Controllers and CFOs are the people that would look into the future of your business and understand how can they grow your business in terms of bringing more profit to your business. If you are not measuring, if you're not looking into the future, if you're not predicting the future, there's no cash growth in your business. You're just going to be an average businessman who is paying its taxes and delaying your retirement simply because you're busy in your day-to-day life. So think about it this way. When Warren Buffett started his companies, his business, he had a certain team of CPAs. Obviously, as the business starts growing, he grew out of those accountants and the bookkeepers and the tax preparers he was working with, and soon moved into the future-facing, establishing a team that is more future-facing. So a tax planner, a CFO, a tax attorney. Those are the people that are coming in and they're reading the tax code, they're interpreting it, and they're making sure that he is staying in that 15 to 17% tax bracket, even if his wealth is growing exponentially. So again, when you started off as a business owner, maybe having a simple bookkeeper or a tax preparer was okay. But now that your business is growing, you definitely need to have somebody on your team who is more proactive and future facing.
Okay, that makes sense because I want everybody to be able to understand this. So what's happening majority of the time is somebody is just reviewing everything, getting everything together, making sure your books are compliant, getting it all prepared, maybe even sent over to the IRS. But there's no strategy behind any of that. They're just making sure that you're legal and good to go.
That is correct. Exactly.
So that's a huge difference between, basically just being reactive instead of proactive.
That's correct. Yes.
So one of the things that I want to get into, and we had talked about before, is asset protection and what that means specifically to you as, and maybe you can talk about it if it's somebody that has, maybe several businesses, because I know a lot of my friends may have 3, 4, 5 LLCs, and what that looks like as far as, the same approach that you use with your team. What does that look like?
Yeah, so one of the things before I get into answering your question, I want people to understand how tax planning and asset protection are intertwined and how we should not look into one thing and completely ignore the other. Now, think of it this way: like if a client comes to me and I am able to save him $25,000 in taxes, not only this year but every year going forward. So he's building up 25,000 extra dollars in cash and in his wealth every year. However, if he does not have the entity asset protection in place, any wrong lawsuit that might come his way in the future will take away all of that wealth he has built over the past few years. So that's why understanding the entity asset protection is so equally important, or even more important than even what tax planning is. So let's jump into what is asset protection and why do we all need it. So think of it that way. If you have a company or a corporation, that means you are not the company and the company is not you. So when we as business owners establish an LLC, our understanding is when we have an LLC, our state statute says that we have to have the minimum requirements, and those minimum requirements are much less than having a corporation. Now, anytime we establish an LLC, within 30 days, I can guarantee that most of the business owners go out of compliance. And once they're out of compliance, they completely become a target of any of the lawsuits that are coming their way. Now, here's a reason why. Anytime there is a lawsuit, state statute says that you have to have the minimum in place, which means if you have an LLC, you don't need to worry about maintaining corporate meeting minutes. You don't have to worry about any of the documentation. And that's why we can go on LegalZoom and establish a $50, LLC. And Court Precedence says anytime there's a lawsuit, the first thing that the third-party lawyers are going to ask for you to produce are your meeting minutes, your operating agreement, your resolutions, and your amendments in place. Now, most of us do not know what that is, and some of us do know what that is. And being an S corporation, maybe they're maintaining their meeting minutes once a year. However, being an LLC owner, if you're not maintaining any meeting minutes, and as an S corporation, if you're maintaining a meeting minutes once a year, that's not going to protect you against the lawsuit. So the moment the third-party lawyers know that you don't have the resolutions and amendments in place, they're going to come after not only your business asset, but also your personal assets. So there's a big myth that if I have an LLC, my personal assets are protected. Yes, they're protected if you are in compliance. And like I said, within 30 days of establishing an LLC, everybody goes out of compliance because most of the business owners do not know how to stay in compliance. The number one thing to stay in compliance is not piercing your corporate veil. And most of us have heard of this term. What is piercing your corporate veil? Again, we will come back to saying that corporate veil means we are acting as our business is separate from us. You're not the company and the company is not you. And it is very easy for us as business owners to literally let go of that difference in our day-to-day life. The things that we do may easily put us out of compliance, and we have immediately pierced our corporate veil. As soon as we have pierced our corporate veil, we are out of compliance and we are susceptible to all the lawsuits, and majority of us will lose that lawsuit. So maintaining a corporate veil and documenting everything is the law. Does not matter whether you have an LLC. It's pretty bad if you don't even have an LLC. But even if you have an LLC, it's just a wrong mindset that you're well protected. So think about it. You're building wealth here, and then all of a sudden your corporate veil is pierced, and you don't only lose your business in the hands of a wrongful lawsuit, but you also are susceptible to losing your personal wealth.
No, that makes sense.
Yeah.
So, if you don't have this set up and you don't have it properly, what percentage have you seen? Is it 70%, 80%, 90% of LLCs aren't set up properly?
All the clients that I work with, I have yet to see one who has done it right. So 100% of my clients have done it wrong, and which is very unfortunate. But my team, the moment we get involved with our client, my team and I make sure that they have all the resolutions in place, which means that anything that they have done wrong in the prior years, let's say your business opened in 2016 and you may have done quite a few things wrong. So my team and I will come in and we will establish what has been done wrong, do a thorough audit for all these years, and put the systems in place in terms of maintaining your resolutions and amendments and meeting minutes, just to make sure that we can go as far back as we can, so that our corporate veil is not pierced. So maintaining all those documentation and doing an audit in the very first year of working with us, and then every year going forward, it's going to be customary and you would be already used to the process. So then from there on, you can either take it yourself or you can continue working with our firm and we can keep providing you that service.
No, I love that. And one of the things that I like a lot, and that is to, and I know a lot of people pay attention to stories or examples. Can you give me some examples of tax planning in action?
Yes, for sure. I will give you an example of tax planning, but also an example of how to kill two birds with one arrow. Here's the reason why I said it. Like, we talked about entity asset protection. We also talked about tax planning. Now, how do these two go together? Let's set an example here. So I am thinking that if I am a business owner, I want to utilize my home conference room because I have meetings outside work, and those meetings can be documented when I utilize that home conference room that I have established in my house. Now, this home conference room is totally different from the home office deduction. Okay. So in the home conference room, when I'm sitting and taking notes and, have invited my spouse, I have invited my accountant, I can invite my lawyer, or I can have the meeting with myself, or I can invite my staff in my company. So when I have done that, I'm sitting and I'm documenting those meeting notes, meaning anything is a fair game when you're having a meeting with yourself or with your team. So, for example, any of the decisions that we fired this personnel from our company this month, and we got into an agreement to do some outsourced services with this company. So anything that you write down is a documentation where you're saying that my company is not me and I'm not my company. So that again becomes your evidence that you are treating your company as separate as you can from yourself. So that is maintaining those meeting minutes, and also renting a home conference room space in your house. It's going to bring you two benefits. Number one, when you rent a home conference room office in your home, the IRS clearly states in its publication 527 that if you are renting your home conference room for 14 days or less in your house, you don't need to tell us about that income, which means your business is paying rent to you personally. The EIN is paying rent to your social security number. So when your EIN pays the rent to your social security number, your EIN, which is your business, can take it as a deduction on the books. However, your social security number does not have to show it as any form of income on your taxes. So what's happening? You're taking a deduction, but you're not showing it as income. And the IRS is completely okay with that. So that is your tax benefit right there and then. However, the other purpose that it is serving right now is because you are maintaining your meeting minutes, you're also working towards maintaining your corporate veil in place. And that becomes your entity asset protection too. So that's why I said killing two birds with the same stone, one stone. So utilizing this strategy will help you not only take a deduction in your tax return, but also maintaining your corporate veil. That's why if tax planning is so effective, because we can accomplish a lot more by just utilizing the right kind of strategies. Now, again, can everybody take this deduction? We don't know. We have to analyze everybody's situation and identify if they would be a good candidate for this deduction or not.
No, I love that. So, what if somebody, just heard this and they're like, well, my CPA didn't tell me this, or, I've never heard this before. But they've known, Susan or Bill, and they've been their CPA or tax preparer for 20 plus years, or their family or something like that. So if someone who wants to use your team to accomplish this, do they have to change and go to your CPA firm, or how does that work?
Absolutely not. And it's a very fair and a great question, because a lot of times, most of the business owners are very, very attached to their CPAs. And I understand they have been their CPAs for many, many, many years. So our team comes in where we are more proactive. What your CPA is doing is, again, preparing your taxes, maintaining your books, and we're definitely okay with them continuing to do that. Now, where we come in, we would prepare a official tax plan for you, which is a totally different service than preparing your taxes. So when that official tax plan is prepared, you can take that tax plan to your CPA, and they should be able to introduce those strategies in your tax return and in your books, if that's what you want. If your CPA is not competent or is not aware of the tax code and they do not want to introduce those strategies, you can certainly come back to us and we can prepare your tax return for you as well. But it is not that you have to kill your relationship with your CPA in order to work with us, because obviously we are doing two different things. And that's where understanding of what tax planning versus tax preparation comes in.
Yeah, and I know, because it's always, if you've trusted somebody or you've known somebody for a while, or you don't want to change, that's always seems to be. So you work with and assist, and you can work with, assist, and help. Or if they do want to make that change, you can assist in them making that complete change to you.
Yeah, and Jason, I have yet to see one person who would go back to their CPA after working with us on the tax planning end, even though they may say in the beginning they would like to keep their CPA. And I'm not bragging, but here's what happens. When we do a tax plan for our clients, we can show them instant savings. And those instant savings can come to you in cash right away, like immediately as you start implementing those strategies. So that is additional $8,000, and we have shown our value right away to our clients. And that's where we build that trust with them. And that's why they want to come back and do their tax returns with us and not go back to their CPA. Because if you and your CPA are doing the effective tax planning, then there is no need for you to come to me and my team because obviously you are taking the benefit of all these tax strategies. But if you are thinking that your CPA has never told you what tax strategies you can utilize, and they cannot come up with 1 or 2 or 3 or 5, 10 different strategies every year to save you more and more money as your business is growing, then you probably have grown out of your CPA. Yet, if you have an amazing relationship with your CPA, it will still work. You just take the tax plan and have them implement those strategies in your tax return.
No, I love that. I like that. I think that's really important. I like that word grown out. Because
Yeah.
so many people, as especially if your business has grown or you've added LLCs, are you starting to get into rental property and stuff like that, and you started with somebody that maybe used to doing very small businesses. This as each of these identities that you take on, each of those are going to create extra tax savings. So if they want to have a meeting with you and you can instantly show them, here we can save you thousands of dollars. I mean, obviously I would take that meeting. I mean, anytime you can do that, and then show them with cash what can happen. What is the process for your services, your pricing, and so everybody understands that?
Yeah. So our process is we ask our clients to book a 45-minute consultation with us. And that same option is available to anybody who is looking to get some information or is exploring the idea of working with us. So booking that 45-minute consultation, which is free in the first hour, we will work with you identifying what your needs are. So whether you're a startup, are you in the growing phase, or are you a well-established business, that will help us identify the strategies that we can actually implement and what are the things that we can do with your business in the long term. And immediately that strategy session turns into a more customized communication where we're just paying attention to your specific needs and situation. So if the person or the business owner decide to work with us, then we will before we actually decide to work together, based on the situations, we can give them an estimated amount of savings at the end of the call so that they can make a decision whether it is worth for them to move forward with us or not. So those estimated tax savings will be a very conservative estimate, because obviously I can't give you the full number because I still have to delve into identifying the strategies that will apply to you specifically. However, there could be some tax savings that I can identify immediately and can give you a rough estimate of the savings that you will have by working with us. So that allows the business owner to make a decision right there and then whether
Yeah,
it's
no, I love
worth.
that.
Yeah.
Yeah, I love that. One of the things that I've been wanting to ask you since I wanted to have you back on, and we'll be having you on regularly to go over this because I think it's so important that people understand this, especially with being proactive in this. What are you seeing anything, with people working from home now? We're getting into almost like post COVID, even though, they said there's a little spike or whatever. Is there, from our last, when we talked about the PPP and all that last month, is there anything that you could share that may be like an update? Or I know you talked about working from home, and everybody's been working from home, so those deductions and stuff like that. Is there anything that the IRS is changing or?
Yeah, so there has been quite a few changes, and I can definitely talk about a couple of them that just came through. One of them that just recently got passed was if you are a business owner and looking into acquiring a business, this would be a good time because most recently you can acquire an SBA loan at very, very, very low interest rate and utilize that amount to purchase that new business that you are looking into buying. And the great thing about it is your payments do not start. You will get deferred payments of 6 months. After 6 months only, you can start paying the minimal that they would require or calculate for you. And it could be anywhere from 15 to 30-year term loan. And that has been the newest change. I also know that some of you have received the PPP and you must be getting closer to your forgiveness term. One of the changes that came through, which they still have to identify whether you will qualify for it or not, but instead of the forgiveness term to be 8 weeks, they're looking into extending it for 24 weeks. Not everyone's going to qualify for that, but that is something that you can communicate with your CPA and they can definitely walk you through that process. Because if you get 24 weeks over 8 weeks, anything that is not forgivable will be extended to that 24-week period, right? Another change that came through initially, the requirement was that you have to utilize 75% of the PPP loan money into paying salaries to your employees. If 75% of that loan amount is not utilized in taking care of your payroll costs, then everything becomes not forgivable. Now they have lifted that, and initially it was 60 and 40. The latest is even better, where they have uplifted all of these requirements. So you don't have to have the 75% in your payroll cost for you to make it forgivable. And there are quite a few other changes that came through, and I believe we talked about this. What really stands is if you have an IRA and you have about $100,000 in your IRA, the government has allowed, the Congress has allowed at this time to take money out of that IRA without incurring any penalties on that early withdrawal. And once you pull the money out, you can utilize it for anything you want. Within 3 years, you can either put the money back or you can just pay taxes on the money that you withdraw on that IRA, but there won't be any penalties. This way, it will just help you carry your operations in the business in case you didn't qualify for the PPP or EIDL loans. So that's something that is still there. And yeah, I believe that's pretty much it. There has been changes, and the major changes were what we just talked about.
No, I love that. And so if somebody wants to, if there's a business owner or entrepreneur and they want to follow up with you or your team, maybe they have more questions, maybe they want to set this 45-minute meeting up. What is the best way to get a hold of you, and what's your website again?
The best way to get a hold of me is, again, going into my website and making an appointment with me. There should be a calendar link. You should be able to see 1 week's worth of calendar link and the times available. And that would be the best way to make an appointment with me. The website that everybody can go to is www.jindal, which is my last name, JINDAL
Perfect. And that way they can go on jindalcpa.com, and I'll put that in the show notes for everyone. And then they can get, that 45-minute free consultation with you. It's something whenever people think of this, they always, want to keep putting it off. But I think now is the time where people need to be more, I think through this COVID and everything, it's taught us to kind of focus, get clear in the things that we're doing, and kind of be a little bit more focused in our lives. And this is just one part of your responsibility as a business owner. But the beautiful part about it is, and this is what I love about your firm, is you're not just by putting something off, you're costing yourself thousands of dollars. So, that is something that you can show them, and that's something that's really exciting. So I will make sure we put that in the show notes. Sandhya, I appreciate you coming on the show again. We'll have you back very soon, and we'll go over another topic. And I appreciate all the value and all these tips and techniques that you've given to business owners here in New Mexico.
Oh, thank you, Jason, for having me. I hope I was able to clarify to the business owners that you have an option of not paying so much in taxes. According to Forbes, every business, 99% of the business owners pay $10,000 or more in taxes simply because they're not aware. So we as business owners have the majority of the responsibility towards becoming the entrepreneurs and bringing the revenue that we can. And one of the best resources to increase your cash flow is to do tax planning. And I'm really thankful to you to give me that opportunity to come in and explain to your listeners what tax planning can do for them.
Well, perfect. Thanks, Sandhya, and I hope you and your family stay safe.
Thank you. Take care. Bye-bye.
Thank you for joining us on the Albuquerque Business Podcast. And thanks to our sponsor, RigbyDigital.com. Make sure to subscribe and share. And go to abqpodcast.com. Get show notes, resources, and links to everything we talked about today to help you navigate your journey as an entrepreneur and business owner.